Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel, where you will learn about stock investing and personal finance that will help you become a great investor. In my previous video last week, I talked about Alibaba stock's 3 major risks that are making the stock undervalued right now. In this video, I want to talk about why Alibaba's 33% owned Ant Group is a disaster right now, and what is Ant Group's rectification plan as required by the Chinese regulators, and how this will impact Alibaba stock going forward. So I will cover these topics in this video. First, what is Ant Group's rectification plan or business overhaul as required by the Chinese regulators? Second, how will the rectification plan affect Ant Group going forward? Third, will Ant Group have an initial public offering IPO again? Fourth, how will Ant Group's business overhaul affect Alibaba stock going forward? Fifth, summary. Is this a buying opportunity for Alibaba, and what I will be doing with all this information going forward? If you like this video, smash the like button and subscribe, and also turn on the notification button. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. Let's start. First, what is Ant Group's rectification plan as required by the Chinese regulators? And why is Ant Group currently a disaster? So as you may already know, Ant Group's IPO was suspended by the Chinese regulators right before its IPO date. The IPO was supposed to be the largest in history. Ant Group was valued at 300 billion, making it the largest fintech company in the world. Ant Group's suspended IPO happened a week after Jack Ma made a speech at the Bund Summit 2020 in Shanghai. Jack Ma criticized the Chinese regulators for not taking enough risks to allow companies to have greater innovation. He also criticized the current financial system in China still adopting the same pawn shop mentality, lending to consumers and businesses based on pledge and collaterals. He said it is impossible for the pawn shop mentality of collaterals to support what global development demands of finance over the next 30 years. He suggested that the credit system should be based on big data to ensure that credit truly equals wealth. So on December 27th, 2020, almost 2 months after the Ant Group IPO was suspended, Peng Gongsheng, the deputy governor of the People's Bank of China, made this announcement to the public. I want to show you this direct Chinese to English translation from the People's Bank of China website. The translation is not perfect, but it explains to you the main reasons the Ant Group IPO was suspended. The deputy governor said the financial management department pointed out the main problems in the current operation of Ant Group. The company's governance mechanism is not perfect, which means not sound. The legal consciousness is indifferent. The regulatory compliance requirements are defied. There is illegal regulatory arbitrage behavior. The status excludes business operators in the same industry, damage the legitimate rights and interests of consumers, and triggers consumer complaints. Then the deputy governor gave 5 points to overhaul Ant Group's businesses. This is very important, he said. First, return to the origin of payment, enhance transaction transparency, and strictly prohibit unfair competition. The second is to operate personal credit investigation services in accordance with laws and regulations to protect personal data privacy. The third is to establish financial holding companies in compliance with law, strictly implement regulatory requirements, and ensure sufficient capital and compliance with related transactions. The fourth is to improve corporate governance and strictly rectify financial activities such as illegal credit, insurance, and wealth management in accordance with the requirement of prudential supervision. Fifth, the securities fund business was carried out in accordance with the law, strengthen the governance of securities institutions, and carry out the asset securitization business in compliance. The Ant Group must fully realize the seriousness and necessity of ratification, meet the standard supervision requirements, and formulate a ratification plan and implementation timetable as soon as possible. Here are the key takeaways. First, Ant Group will need to return to focusing on payment solutions, specifically Alipay. Alipay is one of the two digital payment platforms in China. The other is WeChat Pay. Now, according to iResearch, both Alipay and WeChat Pay had a total market share of 94.2% in Q1 2020. Second, Ant Group will be prohibited from monopolistic practices and behaviors that can drive out competitors. Third, all of Ant Group's businesses will need to have the right licenses, have the right regulatory supervisions, and strictly follow all Chinese financial regulations and laws. Fourth, Ant Group will need to establish holding companies and have enough capital, just like traditional banks, to absorb losses instead of passing the majority of the risk to the state banks. Fifth, Ant Group must have the right corporate governance, protect consumer data privacy, have enhanced transaction transparency, and rectify all businesses that are currently deemed illegal right now. So how will the ratification plan affect Ant Group going forward? Now, I'm not familiar with Chinese regulations, but this public release shows that Chinese regulators are treating Ant Group as a traditional bank and not so much a fintech company. If we look at Ant Group's IPO prospectus, you can see Ant Group's financial services, including credit, investment, and insurance services, have been growing at a faster pace than Ant Group's digital payment services. So going forward, all these ratifications will force Ant Group to have a low revenue growth because Ant Group can no longer expand its financial services aggressively without the proper licensing, proper compliance, and regulatory approvals from the Chinese regulators. This also means Ant Group will not have a 300 billion valuation if it has an initial public offering again, because the market will take into account Ant Group's lower revenue growth. Another biggest risk is that Chinese regulators could ask Ant Group to break up and to separate its digital payment business from its digital financial services. But this is not mentioned in the People's Bank of China's public release. Will Ant Group have an IPO again? I believe Ant Group will eventually have an initial public offering again, maybe in the next 2 to 3 years, but it's likely not going to happen in 2021. It will take Ant Group at least 1 year to have all the proper licensing for its businesses, set up financial holding companies, have the right regulatory approvals, have enough capital to absorb losses like a traditional bank, have the right corporate governance, and rectify all the credit, wealth, and insurance businesses that are currently considered illegal or not compliant by the Chinese regulators. How will Ant Group's business overhaul affect Alibaba stock going forward? Alibaba owns 33% of Ant Group. If Chinese regulators force Ant Group to break up its businesses, I believe it will cause Alibaba stock to have a huge price drop temporarily, similar to Alibaba's stock dropping 13.34% right after the anti-monopoly probe on Alibaba was announced on December 24th, 2020. But realistically, Ant Group is already a separate company from Alibaba. Ant Group provides all the payment processing and escrow services to Alibaba's customers and merchants. In the long run, I don't think Ant Group will have a huge impact on Alibaba's stock, even if Ant Group needs to separate its digital financial services from its digital payment services. Summary, is this a buying opportunity for Alibaba, and what I will do with all this information going forward? Right before making this video, Alibaba stock dropped 13.34% on December 24th, 2020. I did buy more shares of Alibaba on the next trading day because I believe Alibaba is currently undervalued compared with JD.com and Pinduoduo. I like Alibaba's long-term growth prospects in the Chinese e-commerce market. I also believe Alibaba will eventually reach 1 trillion in market cap given its market dominance in the Chinese e-commerce market. My Alibaba shares are around 4% of my portfolio, but I will always keep my exposure to Chinese stocks to less than 10% of my portfolio to reduce risk. I also believe the current political risks, including Ant Group's suspended IPO, the US Holding Foreign Companies Accountable Act that may delist Chinese companies from US stock exchange within 3 years, and the current anti-monopoly probe on Alibaba are temporary. If Ant Group has an initial public offering again in the Hong Kong Stock Exchange, I will not invest in Ant Group because Chinese regulators are forcing Ant Group to return to its original business, which is its digital payment business or its Alipay platform. Chinese regulators are treating Ant Group as a traditional bank. This means Ant Group will not have the same high revenue growth as before. There is always the risk of Chinese regulators forcing Ant Group to break up its digital financial services from its digital payment services. Ant Group will need to have more capital and take on more loans on its balance sheet, similar to a traditional bank. And according to the Wall Street Journal, Jack Ma, whom I admire a lot, even offered parts of Ant Group to the Chinese regulators. If that is the case, there will be further regulatory control on Ant Group going forward. So I will not invest in Ant Group if it goes IPO again. If you like this video, hit the like button and subscribe, and also turn on the notification button. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching.